So, there's been a lot of false narratives floating around about how irrelevant your credit profile is or how unimportant your credit profile is. And their argument, live your life. If you really want a loan, you'll get a lender because anyone can get qualified. Hi there, and you're welcome to Growing with Nelson. Here, I talk about personal finance, investment journeys, creating wealth, building wealth, and managing wealth, as well as budgeting. So don't forget to hit that subscribe button, like this video, click on the notification bell so you can get more videos when I share them. If you live in the Western world, so North America, Europe, literally any first world country, you would realize that most of these countries are credit-based economy. And so in order for you to thrive in these economies, you need to have a credit profile. That's why they're called credit-based economies. It's becoming increasingly important because so many processes are becoming tied to how good your credit is. Before we continue, let's take a moment and define what a credit profile really is. A credit profile or your credit profile is a summary of your financial profile in the country that you currently live in or that you've lived in since the day you turned 18. Just like your high school report that shows your grades, your credit profile actually shows your financial performance. And based on that financial performance or those financial performance that are shown on your credit profile, a score is assigned to you, which is called your credit score. Now, this score can be used to access so many things and can be used in making important decisions in your life, such as getting a mortgage, renting an apartment, leasing that lovely vehicle that you really, really want, or actually getting a job. Yes. Believe it or not, it's happening these days. Most employers go as far as looking at your credit profile to decide if you're suitable for the job they're about to employ you on. And can you really blame them? If your credit profile actually shows your level of competence in managing finance, how disciplined you are, and how trustworthy you can be, and most employers will want to use that as a criteria to actually judge if you're good enough or a right fit for that job, especially those jobs that has to do with finances, that has to deal with finances where you have to manage money. You have to be competent and you have to be disciplined. And your credit profile can tell your employers just that information. Now that we know this, we can go ahead and look at what a credit score actually looks like, the highs and the low. Typically in North America, your credit score ranges from 300 to 900. And depending on where you fall on, you can be considered a good credit person or a risky credit person. This is what a credit score looks like, right? You can see it ranges from 300 to 900. Now, if your score falls between 300 and 625, it is considered poor. Lenders avoid you, and you find yourself falling to private lenders if you need a loan, or B lenders where their interest rates are actually higher. And with a higher interest rate comes a higher payment, which is not good for your wealth creation. If your credit score falls between 626 and 680, it's considered low. If it falls between 681 and 720, it's considered fair. At this point, the banks are starting to trust you. We can deal with this person. We can lend to this person, right? Now, a good credit score falls between 721 and 780. But I must tell you, for most Canadians, at least, or most people in the United States, their credit score falls somewhere between 650 and 700. So if you find that your credit score is between 720 and 780, you're doing something very, very right. Most lenders are attracted to you. They want to do transaction with you because they believe that their money or the funds that they're lending to you will be safe and be repaid as at the contracted agreed time. An excellent credit score is a score that rovers around 780 and 900. And you probably have about 2, 3, or maybe 4% of people in a credit based economy that actually have these scores. But once you have this score, you have so many benefits. Having a great credit score is fantastic, and there's so many opportunities. They are actually endless. But I'm going to go through some of them with you so that you can see the advantages of building your credit profile. Okay. One of them is a lower interest rate. With a great credit score, the banks generally want to lend to you, and one of the incentives that they give you to bank with them and for having a good credit score or a great credit score is a lower interest rate. Who doesn't want a lower interest rate? A lower interest rate gives you a lower payment. You could have a loan that should have gone for $500, But with a great credit score and a lower interest rate, you can get that loan repayment terms for $400 a month. That keeps about $100 in your pocket, which is something that you can use towards your savings, building more wealth, or investing. Another opportunity that comes with a great credit score is the faster loan application or loan decision process. And please take it from someone that has said yes to many applications and said no to a whole lot more applications. I am telling you for free. If you have a great credit score of 780, psychologically, the underwriters are already looking at you as a lovely person, a lovely applicant. They want to lend to you. Now, that's not the only criteria used for making a decision on an application, but that's one of the criteria. And psychologically, it tells underwriter that this person has done something right in managing their finance. And I can look at other factors, but at least I have one good factor that I could say yes to. There is also the opportunities you can get by having flexibility. By flexibility, I mean you can have multiple loan products automatically approved to you. Have you ever logged into your bank and you see uh, you've been approved for a loan or for a line of credit or for a credit card? That's because somehow the algorithm feels like this person can repay. That's some of the opportunities you get by having a good credit score. Naturally, most banking applications would not automatically approve someone with a 400 or 500 credit score a new credit card or a new line of credit, right? Where they're kidding. You are portraying to them that you're a risky candidate to lend to, and so their money potentially isn't safe in your hands. Now, there are multiple reasons why you might have a bad credit score, but the underwriters don't know this. The loan decision makers do not know this. All they see is a credit profile that looks bad, and they have to run away from you. If you really want to get a good job, get a good credit score. If you want to get that fancy apartment by the waterside, the view so nice and lovely, get a good credit score. If you want to lease that luxury car, the lovely car you want to drive, get a good credit score. The opportunities are limitless and it will help you in a credit based society. While most people think that wealth creation is I have $1 million and I want to 2x my $1 million or 3x my $1 million, they forget the basics. And the basic is how can you access the funds in order to get $1 million? Because let's face it, averagely, the middle class citizens do not have $1 million sitting around. But in order for you to invest into income generating assets, you need loan, you need funds. In order for you to get those funds, you need to approach the banks or the lenders. And in order for them to give you those funds, if you qualify, you need to have a good credit profile for them to trust you enough to give you those funds. Before I wrap up this video, I'm going to take you through the different things that makes up a credit score and how your credit score is actually calculated. It's interesting to see the different parameters that go into the algorithm that calculates your credit score. And if you understand them very well, you can understand how to maintain and build your credit score. Whatever credit that you see has been calculated based on these five parameters that you see. One, the payment history, the debt utilization ratio, your credit history, your credit application frequency, and credit diversity. So let's take them one by one. The payment history. For payment history, most banks and most lenders wants to see if you ask me, for example, if you ask the bank to say, I want to borrow $10,000, well, I'll go and look at your credit score or your credit profile and say, for the last 6 months, for the last 1 year, how has this individual or this applicant paid their existing credit? Because the assumption is that you have borrowed from other lenders before and you've done some sort of transactions with them. So have you paid on time? That payment history loan, which is your past financial history with different lenders, tells your current or potential lender whether you have paid on time or whether you've delayed your payment, whether you've missed your payment. And so that payment history alone makes up about 35% of your credit score and how your credit score has been calculated. Then there's the debt utilization ratio. How much debt do you use? So if you have, or if you come for $10,000 and I look at your credit profile, you've owed $20,000 before, but you out of those $20,000, you still owe about $19,000, then your debt utilization is high, right? It tells me as a lender that this person actually loves to use debt. Now, I don't know what you're using the debt for, but I prefer someone that really do not like to use debt a lot, or at least have some sort of average utilizations for debt. Okay, so if I look at your profile and you had a previous loan of $20,000 or a previous line of credit or credit card, an existing one of $20,000, but the balance on it is about 8,000, 9,000, or 10,000, I could say, okay, fine, this person has the ability to access 20,000, but they've only used eight, nine, or $10,000. So they are considered not much of a credit seeker, but someone that really just wants credit to build their credit profile. And there's your credit history, like how long, this is just really simple, right? How long have you been on a credit bureau? Put it this way, if you're a lender, let's just play a reverse role here, right? Would you prefer to lend to someone that is new in the country? Or would you prefer to lend to someone that has been using credit product for the last 5 years and has maintained a stability in a way that you look at it, the credit profile is good, the credit score is good, the existing products are good. Obviously, every lender wants to lend would lend to someone that actually have an existing credit history because it shows them that this person understands how to use credit to repay credit and maintain credit. And the last two talks about credit application frequency and credit diversity. So how many products do you have? That's a diversity. Loans, lines of credit, credit cards, those are different diverse products. And credit application frequency shows how often do you apply for credit. It doesn't really look good on you when you apply too frequently for credit. So if you apply every month, it shows you're a credit seeker. It may throw signals to the underwriter or the loan decision maker that this person really needs money to pay off some existing debt that they don't know about. And that's not a good sign, right? But if you apply for credit once or twice a year, it tells the lender that, well, this person doesn't really apply for credit all the time. This person possibly needs this loan this one time to just pay off a certain debt that may have just accrued or for investment purpose. It doesn't really matter what it is, but it just tells the lender that you're not a credit seeker. And they have more trust for those kinds of applicants than the ones that apply all the time. Now, those are the basics when it comes to credit, what a credit is, what a credit score is, and how your credit scores are being calculated, and what good can come from having a good credit score. So, tell me in the comment section, what's your credit score? And what are the challenges you've had in building and maintaining your credit score? If you like this video, please subscribe, hit the notification bell so you can get more videos when I upload them. Like and share these videos so we can keep building this lovely community together. Until my next video, stay safe and stay blessed, guys. Bye.